Welcome to Moneyman. This is our monthly feature, State of the Markets, where we look at the market's underlying data and try to understand what is really going on. As you know, I always say that indices are not equal to the markets because what is happening in the overall markets has nothing to do with what is happening on the indices. And the last month is the perfect example for this. Let's dive in. This is what we do. We are a SEBI registered research analyst with a lot of experience, and our objective is to help busy professionals create wealth. So this is our quant market map where we track a host of features, host of market data, and all these metrics have been derived over a period of years, and they give a good indication of how the market is from a peek under the hood point of view. Now, if you see, this is for the entire month of November. We saw a bit of positivity. In fact, the month started with a bit of positivity and then very soon became very negative. Greens indicate positive activity, reds indicate negative, yellows are no man's land, neither here nor there. Dark greens are extremely important because they signal a reversal from the downside towards the upside. And right now you do not see any dark reds, but dark reds signify a reversal from the top coming down. That is when markets reverse. So again, what we see is that we started the month on a positive note, immediately became negative, and as I had mentioned in my last month's video, November seasonality is a very unique one. From around 7th to 10th onwards till about 21st of the month, the market is generally very negative, and that is what we saw in this entire month, that the market turned negative and remained more or less negative or in no man's land with a little bit of positivity sometime in between, and then eventually turned very negative towards the end of the month. And we actually ended the month on a sour note. Now, this is as far as the overall market is concerned. The most important aspect in this month is also that the Nifty hit a new all-time high, which is supposed to be very significant. But however, it wasn't for this month. This is how the entire month's performance was seen on a broader index, which is the Nifty 500. This gives at least a better idea about how the overall market has behaved instead of Nifty 50, which is just 50 stocks. This one is 500 stocks. Now you can see this is a heat map and the legend is given here. You can see how the overall market has been actually very negative with spots of positivity here and there. There have been some good upside movements, but very, very limited. Most of them are in the negative territory only. Most of them are reds and some of them are very dark red. So this more or less gives a picture of how the entire month has been. We saw the Nifty 500 returning about 0.94%, which is a very average return for the month of November over a period of time. November has seen some very, very good returns, some of the best ones in the entire year. But this was one of the very stable months from an overall index point of view. And now as we see, we are entering December. I had mentioned a couple of months back that October, November, December, these 3 months are usually very positive for the markets. After a very tumultuous or very volatile September month, which also tends to be a lot negative. We saw October, which was a great month on an overall basis, but not so great from a broad market basis. But October month was good for indices. November has been decent, and now we're entering into the most important part of the year, which is December, which usually is extremely positive. Now again, there is bound to be a lot of overhang from whatever has happened in November. So we have to see how seasonality plays out in December. And there are a few concern points. I'm going to highlight them as we move on. Let's dive into the data that we usually analyze. Index returns, we've seen Nifty 500 and mid cap close in the positive, but the small cap index closed in the negative and by a big margin. And if we look at the overall calendar year returns also, we are seeing that small cap index is actually negative 5%. Now this is a cause for concern. Why? Because portfolios in the last 5 to 7 years, especially in the last 5 years after COVID, individual portfolios have become very heavily weighted towards mid caps and small caps. And if these don't perform, it's a big problem. And that is exactly what has happened in the last month. You saw indices going up, you saw Nifty 50 hitting an all-time high. You saw news channels celebrating, but there was no real celebration in the market because wealth creation, wealth generation has not really happened. And one of the main causes for that is how the small cap index has been behaving. It has been very negative, and there are a bit causes of concern over there. Look at the index breadth. This is across just large caps, mid caps, and small caps. And usually it tracks the percentage of stocks which are above key moving averages. Usually the dotted line that is shown in each of these, usually a value of 50% or above indicates the presence of a good bullish market action. However, you can see that only large caps have been seeing a good number of stocks above their key moving averages. The other two, mid caps and small caps, they are not seeing that. And that is precisely why you're not seeing any participation happen. Now you see why only indices are going up while stocks are not, while general portfolios are not. Because indices are heavily weighted towards the large caps, especially Nifty 50, right? The top 50 stocks. Look at the index strength, which is measured by RSI. I measure by RSI at least. Across all four of them, small cap is the one that is really floundering. It is really down on its luck right now. The other three are still showing decent strength right now, of course led by Nifty for now, which is very clear. Unless and until there is a good amount of strength on the small cap index, we are not going to see portfolios rise, and there is not really going to be too much cause of cheer unless and until a lot of people make money when wealth gets generated, right? Let's look at the overall markets now. On an overall market basis, the market breadth is very, very weak. This dotted line, which indicates the 50% threshold, is far from being breached. On an overall basis, that is overall stocks. This is taking all the stocks on the market. They are literally struggling, and this shows why. 28% of them are below their 4-week moving average. That is nothing. Usually, this is where nothing happens, and that is exactly what we are seeing happen in the market right now. Nothing, right? Look at how breadth has moved in the last 1 month. The starting point is end of October, and we still had a decently healthy month, as I had mentioned earlier. The values were pretty good, but the month of November saw all these values going down, and look at what has happened. We've cut down on all these values, which means that markets closed well in October. In November, indices went up, but overall stocks have really taken it on the chin. And see how they've returned the stocks on an overall basis. This is the returns distribution. One glance just tells us that there are hardly any stocks which have given big returns, while negative returns on stocks has been very, very high, with the first three dominating the entire histogram. This tells us how the overall market has behaved and why it is extremely important to track these metrics, why it is extremely important to track the overall markets and not just go by the indices. This has actually been a negative month if you really look at the overall markets. Net new highs. This is one of my favorite. These two actually are two of my most favorite metrics that I track. Net new highs actually tells us how many stocks are making new highs in the market. This is important because a bull market is signified by new highs, not only at the index level but also at the stock level. Now in the last few days we saw the index Nifty 50 hitting new highs, but stocks in the overall month they've really been floundering. In fact, they've been hitting new lows, not new highs. See this, the net new highs has been negative. So that means that more number of stocks have been hitting new lows than new highs. And this is when we saw the markets really going down those 3-4 days approximately, which we saw in my market map also, 21st, 24th, and 25th, when the values really dipped down, everything came down by a big margin. So this has been a very negative month. Nothing much has happened. Forget nothing much has happened. In fact, action has been only on the negative side, on the downside. This is the advanced decline. This is the velocity index, as I call it. It tracks advances and declines, but with a slight twist. It is a weighted index. So it gives us how markets are really moving. And what I track is how many stocks are up 4% on a day or up 15% in 5 days. So these are two different indices, but both need to be seen in conjunction. Now this is a rolling index over 3 months. So the values don't matter. That's why I've not mentioned it. See what we saw till last month end. If you see, this is the point where things were just going up and it was looking all good. It looked like we were getting into a great November. And then things just started going down. The blue line started stagnating and has been stagnating. The green line has been seeing ups and downs, especially this side where we really saw a cut coming in, which corresponds to these 3 days. What we have seen is that the end of October and end of November are more or less at similar values. Nothing much has changed as far as the velocity index is concerned. This also explains how the entire month has only been sideways to downside movement, and we've all experienced that, I guess. So this tells us how stocks have been behaving vis-a-vis all their moving averages. It's not only is it important to track how much percentage of stocks are above their moving averages, but also how they are behaving vis-a-vis them. How many are above them, how many are below them. What is of concern here are two specific colors. The green color, which is good, so higher the better. The red color, that is number of stocks below both the 4-week moving average and the 10-week moving average, which is usually considered to be a bearish metric. What we have seen in the entire month of November is that the green values have actually decreased while the reds have taken over, which means we've actually seen a lot of bearish action. This data point indicates what is a market health, that is percentage of stocks away from their 52-week highs and how they've sustained. Now, as I showed to you in the previous slide on the velocity index part, what happened in October has more or less been sustained as far as stocks away from their 52-week highs are concerned. So the values you see are more or less similar. So nothing much has changed. This also means that there is a lot of inherent strength, underlying strength in the market. This is a market that can go up fast if need be. As of now, we witnessed that only in the Nifty 50. This shows how sectors and industries have behaved and which ones are the ones that are taking up leadership. Now, bearish markets are extremely important to determine which are the stocks that are going to go up, which sector is going to go up, which industry is going to go up. Industry is a subsection of the sector. Sector is a broad one. As I mentioned in my WhatsApp channel, banks have been taking the leadership, and it is very, very clear in this month of November, where overall market action has been very negative. But what we've been seeing is that banks have actually acted very well. In fact, from a sector point of view, they're the only that is the only sector which has returned positive, while all the others are negative, and is showing some kind of relative outperformance. And the other important metrics that we've seen in the earlier slides, we are seeing that banks are leading by a wide margin. Even within this, where I find a lot of value is in private sector banks. Now, mind you, in the next week, we have a very important event, which is the RBI monetary policy. That will determine if rate cuts are coming in, and if the language, that is a stance, is good, is perceived well by the market, then these banks may really see an upside. But looking at the way they've been setting up technically on the charts, they're all looking like they're getting ready for a good rally. However, this needs to be first confirmed by the market action. But this is where we are seeing a lot of value, and it looks like private sector banks are setting up well to take up leadership. So are PSU banks, but private sector banks for now are looking good. This is just how different industries have behaved. what we need to see is not just the monthly returns, but also how the stocks are behaving within that, and try and correlate with the sector performance. And what we see here is that banks, private sector, are in the top 5 6 with maximum number of stocks above their moving averages as well as near their 52-week highs. This is overall banks. This one is just private sector banks. This is what I mentioned. This is where I see a lot of value going forward, and this needs to be tracked specifically. If there is a lot of good positive movement in the market, good follow throughs, and if private sector banks also give a good follow through, which can only happen if it is backed by a regulatory tailwind coming this week, then these are the stocks that one should look at for building up on their portfolio for the coming months. Factor performance is, it basically tells us how different investing styles are performed, and this is for this calendar year 2025. I've rebased all the investing styles to 100 to give a uniform look and see what has happened. This year, somewhere from September onwards, what we have been seeing is that value buying has been happening a lot. And that is exactly why we are seeing a lot of health metrics of the market not showing good signs right now, because it looks like all the buying is being focused only on value stocks. Value stocks are those which are beaten down and people are seeing value at a lower price and they are buying them, right? And that is where a lot of action has been focused till now. The dark horse right now, which for the entire year has been momentum, in the last 1.5 months is showing some kinds of revival, which is great. This is great news, because the reason why there is no excitement in the market is because there is no momentum in the market. You're not seeing things happen. Investors are not seeing their portfolios performing, and that is going to happen only when the market picks up momentum. It looks like this particular segment is kind of setting up well. I'm just waiting for some confirmations, but let's see how that goes on. But for now, value buying is a style that has been doing really well in the market. FIIs. There has been a lot of volatility when it comes to FII positioning. Now I look at positioning from two aspects. One is in the F&O market, which is denoted by net index positioning of FIIs, which is this slide, and the next one, which is cash buying or selling. What we have seen is that in the month of November, there has been a lot of volatility. Now the line in green below, that is the one that shows how the positioning has been. So it's been going up, down, up, down, up, down. It went out and then again it bottomed out, again it peaked out. Peak means that they are reducing their net index positions, and bottoming out means that they are increasing their net index shorts. So right now FIIs are still short on the net index, and the last few days it's only been coming down. Contrast this with the last few days when the Nifty 50, the blue line, has actually been going up and has hit a new all-time high. Now this is a kind of divergence in action that I keenly watch out for, and this is what makes me very, very careful or cautious about the markets right now. So honestly, I'm not really very excited about the Nifty 50 hitting a new all-time high. It's just 50 stocks, and even out of that, probably about 8 or 9 stocks have contributed to the maximum upside in Nifty 50. Not even 50 stocks, just 8 or 9 stocks. So that's why I'm not really excited, and this data tells me that it is time to be very cautious. In the cash market, the entire of 2025, we all know that DIIs, which is the bottom most panel, they've been buying. And while people would like to say, media would like to say that they've been supporting the market, there's not much support. They've just been buying is what I would say. They've been hunting for bargains, and considering that there has been a lot of value buying happening, it looks like that is where all these DIIs, which are dominated by mutual funds, that is where they are focusing on. Fueled by, of course, loads of SIP money. FIIs, on the other hand, are still generally negative. We see more red bars than green bars in the cash market, with a few exceptions. So unless and until this cash buying starts, momentum is going to be lacking, and that is what we've been seeing for the entire year. barring for some time, which was somewhere from April till May end. That is when we saw like sudden momentum coming in and then it disappeared. So this is something that needs to be tracked very closely to see if momentum comes. Let's see how this plays out. Now, interestingly, a lot of money has flown out of India in favor of not just any country, but in favor of a particular play, which is the AI play. A lot of money, which was supposed to be, which was invested in India, has gone out and actually gone into Korea and Taiwan. Yep, they've been beneficiaries because of the AI play. Now, what I do expect is that with AI going wherever it is going, India will eventually emerge as a great defensive anti-AI play, which means for people to hedge, people meaning FIIs of course, for them to hedge their portfolios from any AI related risks. India could emerge as a great play, and that is where I see a lot of possibility of FI money coming back in. When it comes, that is something that no one can predict, but this is my prediction that India will emerge as a very safe bet against AI risks, and that is why money will flow back into India. So it is extremely important not only to look at the fundamental metrics, but also how money is flowing in. Eventually it is money, FI money, and it is out there to make returns, right? And that's something that we have to keep in mind. So this is something that I'm closely tracking. Now, this is something that is a cause for concern in small caps and something that needs to be highlighted. This is just a technical chart, a ratio chart of the small cap index to the broader Nifty 500, CNX 500. This tells me how small caps have been performing vis-a-vis the broader markets. And this year, which is from this particular point, you can see my cursor, is 2025. We've been seeing that small caps have been generally underperforming. Now, some very critical points here. These are March 2023 lows from which we saw the markets really start zooming up. These are March 2024 lows when markets plunged but then came back up again. This is the June 2024 low, which was the election scare that happened when the markets realized that BJP will not come in full majority, and it really shook up the markets for that one day. Of course, markets recovered. This is the April 2025 low, which happened this year when the markets hit a low and then started going back up again. Now see what has been happening. If I just draw a trend line which connects all these, the main lows, we are seeing this being broken down. And this means that there is a very high chance that small caps may continue underperforming the broader markets by a large wide margin. Now, there is no rule that says that if this trend line is broken down, everything has to go down. There is no such rule. Many times that this breakdown happens, it's a false breakdown, which is also called a shakeout, and then it goes up again. So this is something that needs to be keenly watched out for. The horizontal line which connects these past two lows is a very, very critical support. So I'll be keenly watching out for how small caps perform. Already I've said throughout the presentation that a lot of money has flown into value stocks, into the large caps only. The small caps are literally floundering, and this is another cause for worry. Now, if there is a follow through on the downside in the coming weeks and months, that means that small caps are going to be out of action for a fairly long time, for a few more months. And considering that a lot of portfolios are heavily weighted towards small caps, they may not be seeing performance. So I think we'll get to know in a few weeks whether this action is continuing on the downside, and if that happens, then portfolios will have to be recalibrated to suit the reality of the markets. Of course, more on this later as it keeps building in, but this is something of a concern, and I thought it needs to be highlighted till this particular thing starts going back up. There is no reason for anyone to think that their small cap portfolio will be outperforming the market. Right now, it is in the underperformance phase, and it may continue. So this is something that needs to be tracked very cautiously. And this is also one of the reasons why I am cautious on this market and very selectively building positions in this market is what I would generally tell people. So all in all, what are we looking at? We are looking at the month of November having been a very bad month on an overall basis, even while Nifty 50 hit its new all-time high. While news channels celebrated it, there was really no cause for celebration as the markets were not in a very benevolent mood. Uh, November is over now, December has begun, and it is beginning on a very cautious note. We are yet to see how FII flows happen. More importantly, we are yet to see if momentum builds in this particular month. Uh, a big cause for concern is that markets are negative and bearish while entering the month of December. And the small cap index is kind of giving us scare which needs to be watched out for. These are things that I will keenly watch out for in the month of December, and the entire approach towards investing will need to be recalibrated if things go south side. So this is something that we will keep track, and of course I'll keep updating on my WhatsApp channel. If you're not part of it, please do join. There's a lot of value over there. That's it for this month. The links are given here. I hope you found this of value, and thank you for your time.